Hey guys, welcome back to the channel. Average Trader here with a new video for you guys. So we've just completed our first week of YouTube videos documenting the progress of my trading and what I'm doing and how I'm trading. And I think it was a pretty good week overall. I think last week's trades went pretty well. I hope the videos were okay for you guys. I know I'm only getting started here, so like I said, bear with me. The quality of my videos will improve as time goes on. I've just ordered a new microphone actually from Amazon yesterday, so hopefully that'll be here in the next couple of days, and maybe the sound quality of my videos will improve along with that. So yeah, bear with me, but I think last week was okay, and we're going to hopefully have another good week this week. So I wanted to cover a few things for the week ahead. We'll just recap over the trades from last week, where we're at with those. We're still in those trades, so I just thought it'd be worth showing you where we are now and what we're going to do with those trades going forward into the week ahead. A couple of news stories as well I wanted to show you guys that I thought were important as well and might play a part in the week ahead too. And we'll do a quick update on the markets, and I'll show you guys a few trades that I'm thinking about taking this week as well. So let's get started with all of that. So as you can see, the Aussie dollar short was the trade we took last week. If you want to have a look back at my videos from Sunday, Monday, Tuesday last week, you can see I explained why I took those trades. I went into detail on the reasons behind the trade, where we were looking to enter the trade, and how we were going to manage it. So it's worth looking back at those videos and seeing what you think. And of course, guys, as always, if you like my videos, if you like what I'm doing, please give me a like, and if you want to subscribe, that'd be great too. And if you have any questions about anything that I'm doing in the videos, or the way that I'm trading, or any sort of questions about basically anything, hopefully I'll try and be able to answer for you. As I said, I'm not a professional trader. I'm kind of still in the learning phase myself, guys. So I'm not a professional trader, but I will try and answer any questions that I can answer if people want to ask below. So yeah, the Aussie dollar short, we took it last Sunday, pretty much straight out of the gate when the markets opened, and we sort of just managed the trade for the first couple of days last week. You can see we entered here around about here, I think it was last Sunday, around 60, high 69s. We were targeting this 70 area, and as we went through the week, we kind of just ranged up and down. We got a little bit of a spike higher during FOMC, during the Federal Reserve meeting when Chair Powell was speaking, and I took a few more positions up here, and as we come back down into the range, I closed out a few positions down below just in case we bounced higher again. So overall, we ended up with a good average position overall. We got a nice move down on Thursday. The move down on Thursday was caused by initially by the Fed. I think the Fed Chair Powell basically came out in his meeting and he gave the market everything they could have hoped for. But unfortunately, the markets are at a point now where they've rallied so much, and I think the Fed is kind of, I don't know, I think they're a little bit limited in what they can do to push this rally any higher, let's say. He also came across a little bit nervous, and he spoke kind of strongly about his feelings on, just how long it might take this recovery to take place. I think he threw a little bit of cold water on the idea that we were just going to have this V-shaped recovery and everything was going to go back to normal tomorrow. So that kind of took a little bit of sting out of the market. We started to see a little bit of sell-off after the press conference. And then on Thursday and Friday, we started to see some news creeping in about coronavirus cases increasing in the States. And again, that kind of escalated the kind of risk-off sentiment going into the weekend. So we got a bit of a short move down. We took a little bit of profits off here on Friday. So we banked about $140, $150 at the end of the week last week, which was about 2.5% of the account. Nothing too special, but we still have $348 in running P&L, positive P&L on the position at the moment. And we're looking for some bigger targets on this trade, guys. As I said, normally, 150, 350. I mean, I probably could have taken $600 out of this trade on Friday. And I mean, I don't know yet. I may regret not doing that. Guys. But I just feel like in this trade's got a good bit to give. I'm targeting some areas down lower here. What I'd like to see in this trade is a move back down towards this area here. This kind of coincides with the 38 fib retracement level. So if you draw it up here, you can see it's around about this area here. We've got the moving average here as well, the 100 daily moving average. So I'd like to see a move back down towards this area before we take the full position off. I'd probably take some off around the 23 fib, and then hope for a further move back down here to the 38 fib. Now this is all going according to plan, if we go according to plan. And we need the risk off sentiment to remain in the market for this to happen. We need the dollar to strengthen, and we need the Aussie to weaken, and we need to see continued risk off in the market for that to take place. It's highly possible that that might not happen. We have a bit of a trend line here that the market tried to break through on Friday, as you can see. Thursday we came down, bounced off it, we went back up, retested it on Friday, and then we bounced off it into the close on Friday. So it is possible that we do, you know, if the risk off sentiment changes and we go back to risk on in the early part of this week, we could get a move back up here. At which point, you know, it would have been, I would definitely regret not taking my profit on Friday. So, yeah, I mean, look, we're just going to have to monitor it. We'll watch what happens. If we start to see a move back above, I like this, the 4-hour mid-Bollinger Band. If we see a break and a hold above that Bollinger Band, that's when I'll start to seriously think about closing out my position. So I'll probably just take whatever profits are on the table at that point, close it out, and then we'll watch what happens. We'll see if we go back up to highs. We might reshort it. We'll just have to look at it and see where we end up at, and make a decision on the trade from there. But hopefully we get a little bit of a breakdown. We'll see what happens. Hopefully we get a breakdown on Monday or Tuesday, and then we continue to move back down towards these areas. And it could work out to be probably, you know, one of the best trades for me this year so far, if that's the case. So fingers crossed on that one. A couple of things I wanted to cover with you guys in the news over the weekend. So obviously, I said the big theme going into the weekend was the coronavirus cases going back up in America. I think that's what was kind of spooking the markets a little bit. I mean, you can just see, I mean, look where the S&P 500 is, you know. I mean, we're back up close to all-time highs. We got up to 3,200. Of course, the Nasdaq made a new high. The markets were very, very much overbought. I mean, the risk rally had run its course anyway, and the market's probably looking for anything it can to attach itself onto a reason to sell off a little bit and have a little bit of a correction. Where that correction goes to is anyone's guess, because there's always dip buyers at the moment. Everybody buys the dip. The dip is like sacred now, you know. So yeah, we can see we had a little bit of a rising wedge here in the S&P. We broke out above it, got a little, you know, bit of ahead of itself, and then we've started to sell off. Now the interesting thing is that we came down, we broke this trend line, broke out of it, came down to test the 200 daily moving average, bounced off it, came up, retested the trend line, and then sold off again. So it's going to be interesting to see if we stay outside. If we stay outside of this trend, we have possibility for further legs to the downside here. So we're keeping an eye on that. We'll be watching the US 10-year as well. US 10-year has been a good barometer of where the markets have been lately. They just haven't really bought into the rally, as you can see, guys. The US 10-year has remained very much subdued. We got a bit of a spike earlier on at the beginning of, I don't know, what to say, beginning of this week or end of last week, I think. But again, it sold off again into the end of this week. So we'll keep an eye on that. Oil prices as well. Another good barometer of where we're at the moment. Oil got a little bit ahead of itself. We jumped up above $40 earlier on in the week, and then had a little bit of a correction back to the downside again. Again, obviously, all about the coronavirus news. So just on that, I keep an eye on this website here, just to see what things are doing. You know, it's always a good idea to keep an eye on such a big news story like this. So you can see, I mean, one of the things that stands out to me at the moment is if you look at the daily case numbers here, globally, I mean, it's still going up quite a lot. I mean, we're making new highs on the daily total of global cases sort of every couple of days now, you know. Recently we had 138,400 cases. That was 3 days ago, to make a new all-time high record of daily cases. So, you know, regardless of what's happening in America, this virus is still spreading globally. And that can have, you know, some serious negative impacts on the global economy. In terms of the US, of course, this is the one that everybody's paying attention to, and probably the one I've been looking at the most. You see that the trend was, that we peaked around April and then we started to come back down. But now that since the reopening and a few other things that have happened in America, of course, with the protests and maybe things like that, we're starting to see those numbers starting to creep up again. I mean, if you kind of draw an average line through this chart, you could see that maybe up until like a week ago, it looked like it was kind of flattening out. But now I definitely think this looks like it's starting to trend up again in the numbers, So this is what's spooking the market. The reasons being, obviously, I don't think personally that America is going to go back into another full lockdown. I mean, they didn't really go into full lockdown in the first place anyway, and that's the reason why the case numbers are still so high there, because they never really did it properly. A couple of states in the north did it, but the vast majority of the states didn't follow, a full lockdown, let's say. And then they reopened too early. So, what does that mean? I think, personally, my opinion is that, this could spell difficulty for the market going forward, because the market believes in this quick bounce back. We're going to have the virus, and then 6 months later we're going to be back to where we were before the virus. That's the narrative that's been sort of displayed on the charts, at least for now. But I think that's going to have to change, because what this will lead to is a subdued and protracted economic slowdown. Because if you have a high number of cases like this, right, and you still have a lot of people dying, I mean, it's terrible. It's absolutely terrible. I mean, you have 1,000 people a day at the moment dying in the States from this, okay? So you're going to have, I mean, we see it all the time. There's people out there who they don't pay attention. They don't really care. The virus doesn't bother them. There's probably 60% of the population of most countries that are just, let's say a little bit, blasé about the virus. They don't really care too much. But there's around 40% of the population who do care, who are concerned about catching the virus. Elderly people with, immune deficiencies, things like that. People who are more susceptible to having serious symptoms from this virus, and they are scared. And those people are going to be the people who change the course of what's going to happen in the next few months. Because if this goes on in America for a long time, where you have a high number of cases every day, and it's very, very widespread in the community, then those people are going to make a decision that's going to be bad for the economy. They're going to say, well, I don't want to take a risk today. I don't want to go to the shops. I don't want to buy something because, I don't want to go down and buy a new pair of runners just because I want to. They're only going to go to places that they need to, do stuff that they need to, and buy things that they need. And for me, that just means, we're just going to have just a longer period of time where the economy is not, running on at full pace. So yeah, I think that's what the market is probably going to start to, kind of realize over the next couple of weeks. That's my guess anyway. I mean, I don't know. I'm not an economist, guys. I'm just, I'm just an average trader. I haven't really. I mean, this is just my idea, my theory on it. So yeah, I mean, I think the market might start to realize that actually this is going to be sort of more of a longer, more gradual recovery. And that's going to take a little bit of an edge off this rally. I think that's going to reduce the amount of risk and crazy stuff that we're seeing in the markets. I mean, the markets have been crazy. Everybody knows the markets have been crazy. This rally started off as a bounce from an oversold position. We've ended up in this insane rally that's gone from optimism into complete euphoria. And now we just have people believing that, this is it. We're going to new all-time highs and the stock market's recovered. I don't buy that. I just don't buy it. Maybe I'm wrong, but I just think the market's it's gonna be another correction coming. I mean, look how crazy things are at the moment, guys. I just brought this news story up just to show you. I don't know if you've been paying attention to what's been going on with Hertz, but Hertz are bankrupt. Okay, they declared bankruptcy a few weeks ago. Their stock price plummeted. They, it went to almost zero. And then these speculators came in, these Robinhood traders, as they're calling them, came in. They just bought the shares like crazy, back up to $6 or $7 it bounced to, which is kind of unheard of for a company that's gone bankrupt, I think. And now you have a situation where Hertz have said, well, actually, because there's such strange activity going on in our share price, maybe we can capitalize on that. So they've they've won approval, it says here, to sell shares from a bankruptcy judge, which, I mean, I just don't understand this. So they're bankrupt. They're going to do a stock offering now. They're going to give a stock offering of $1 billion in shares. I don't understand, why would anyone buy that? The company is 5.5 billion in debt. So if they do a stock offering and raise $1 billion, where do you think that $1 billion is going to go? Straight into the hands of the people they owe money to. It's not going to go into the company. It's not going to help the company recover, because they need 5.5 billion to recover, or just to clear their debts. So, I mean, it's a very, very strange situation. We'll just have to pay attention and see where this goes. But I mean, it's just a sign of the times right now, you know. One other thing, I don't want to bang on too much about the virus, but there was a news story yesterday. I just thought I'd point this out to you guys about a second wave in Beijing. They've actually put a part of Beijing into lockdown because they've had a breakout there of quite a few cases. I think it was 50 cases in the last day or two. So they put that. So that might have a little bit of an effect on the risk sentiment going into the early part of the week. In terms of news stories, what have we got coming up? Sorry, not news stories. I meant economic data for the week ahead. A couple of things that we're going to pay attention to. We have on Tuesday the retail sales from the US. This is going to be a big one this week. I think this is going to be probably this could change the direction of the market this week. Obviously, the American economy is very heavily dependent on the consumer. I think they said something like 70-ish% of the US economy is based on consumerism. So the retail sales coming out of the other side of the lockdown now is going to be one that I think traders are going to be paying a lot of attention to. If we get a miss on these numbers, that's going to add fuel to the fire that maybe the economy is not recovering as quickly as expected, and we could see a lot more risk off. Whereas if we get a beat, if it shows that retail sales are better, and people are out spending money again, and people are not afraid of the virus, people are in the shops, that could really help. That could spark a big risk rally. So we're going to pay close attention to this. We've got Federal Chair Powell talking again at 3 p.m. on Tuesday, and I think he's speaking again on Wednesday. Yeah, I'm not sure what he's talking about yet. I'll have to look that up, but it'll be one to pay attention to, of course, as always. And then if we're still in our Aussie dollar trade, I won't be getting any sleep on Wednesday night because at 2:30 a.m. we have the employment numbers. We might be out of our Aussie trade by this point. I mean, if we get a bit of a sell-off early in the week, we might just clear out some profits. And yeah, I mean, you never know. We'll see where we are. I'm probably going to be still in the trade by Thursday, being realistic about it. So let's see what happens with that going into Thursday. Sorry about that, guys. The dog is barking at somebody out the window here, and I've recorded 18 minutes of this now, so I'm not going to go back and restart it again. But anyway, so where was I? Yeah. Okay. One other thing I just wanted to mention. What could put a kind of a fly in the ointment for the trades this week, for my trade in particular with the Aussie dollar short? What could put a bit of a fly in the ointment there? And one of the things is stimulus talk. There's been mentionings here and there over the past week or two about a new stimulus bill, and the market loves stimulus, right? The market at the moment is like living on stimulus. It's like injected into the veins of the market, and it's just like, give me more stimulus. So if we start to see more talk about this, more serious talk about another stimulus bill from the US government, then that's likely to maybe give the market a bit of juice. So we could have to pay attention to things like that, and other things, obviously vaccine news, anything about vaccine news. I tend to kind of notice a bit of a pattern that when the markets start to sell off, or there's any sort of weakness in the market, all of a sudden you start to see these news stories coming out into the news cycle. Oh, vaccine this, therapy that, just anything to kind of keep the markets propped up. So just have to pay attention to those things because they could change the course of the week for us. That's kind of it for the news, guys. I just go back to the charts real quick. I just wanted to show you a few things on there. Nothing too detailed, but just a couple of trades that I'm looking at for maybe taking for the week ahead. Again, all depending on how things play out in terms of sentiment. But what was the first one? CAD Swissy was the first one. CAD Swiss. Yeah, so this one I kind of liked because, again, this is the sell-off from March. We've had this kind of recovery back up, and on Thursday we had a sell-off when the rest of the market sold off, and we had a little bit of bounce on Friday. We came back up, and I just like this area here. We retested this mid-daily Bollinger Band along with the 100 daily moving average, and just bounced off it a little bit. I think it could be a good kind of risk to reward trade, you know. You could probably sell this at the open and just put your stop just above the previous day's high here and just see if it holds. Because if it does hold, you know, you're not going to risk that much, but you could probably get kind of a decent move back down towards the lows here. The thing that stood out to me was that it kind of looks a little bit like a flag, like an upside down flag here, you know. I'm not really a huge technical trader, guys. Most of my trades I kind of trade off sort of, you know, fundamental stuff, and I just kind of look for a little bit of technical stuff for the entry and things like that. But I just noticed this kind of just looks like a big flag, doesn't it? So we may get a bit more of a sell-off down to the lows here. And as I said, I just think risk to reward wise, it's probably worth taking a little bit and seeing what happens. So I'll probably look to enter that trade tonight or tomorrow. One or two other things I was looking at, of course, exotics, dollar MXN or dollar ZAR long. Similar situation, really. You know, it's just come back into this sort of area that I like to see, you know, back to test this area. You know, maybe we'll get a further move higher again. Dollar ZARs or dollar rand, sorry, is a similar position. So yeah, I like to trade these. I don't really like to go long on these pairs because the swap is very expensive on them, and if you get stuck in these trades for a few days, it costs you a lot of money in swap. But I might, I might just take one of these trades for a day trade or something like that during the week. We'll see what happens. I'm not fully committed to this yet. I like the CAD Swissy short better, but we'll see what happens. Anyway, guys, that's going to be it for the video. I'm going to make a video probably tomorrow, and I'll just update you on if I did take any trades and where we're at, you know, with the Aussie dollar short. Yeah, probably do a video tomorrow on that. So yeah, if you want to see that video, guys, obviously as I said, subscribe and like the video. Thanks very much for watching, and I'll talk to you tomorrow. Bye bye.